The full year ended March 2014, the bank's total income for the year was at 49,055 crores, which was up 17% year on year. Of this, net interest income was 18,483 crores, and that was up by 16.9%. For the full year, cost to income ratio was at 45.6%, which has improved from last year's 49.6%. The profit before tax for the full year was 12,772 crores, an increase of 31%. The effective tax rate has gone up for this year. It's been happening for the last few quarters as well. So for the full year, the effective tax rate was 33.6% as against 31% last year. And as a result, the net profit for the full year grew at 26% to 8,478.4 crores. So that's really the full year results. Of course, the consolidated net profit for the year was at 8,743 crores, and that was up 27.3%. So those were some of the key numbers for the bank as a whole for the full year. Moving on to the quarter, the total income for the quarter was at 12,790 crores, and that was up 14.9% over the corresponding quarter of last year. Net interest income accounted for 71% of the net revenues, and NII growth for the quarter on a year-on-year basis was 15.3%. This was driven partly by asset growth and a net interest margin at 4.4%. Other income, which is the non-funds revenue, that was the balance 28.8% of the net revenues, and other income grew by 11% from 1,803 crores to 2,001 crores. Operating expenses were once again held in check with a growth of just a little over 1%, and as a result, the cost to income ratio for the quarter, for the quarter ended March 2014, was at 45.7%, again as against 51.4% in the corresponding quarter of last year. Total provisions were at 286 crores as against 300 crores. I'll talk about asset quality, which links into that a little later. Profit before tax for the quarter was 3,493 crores, an increase of 31.2%. Once again, the effective tax rate was substantially higher at 33.4% this year for this quarter as against 29% in the corresponding quarter of last year. Net profit growth was 23% with a net profit for the quarter at 2,326.5 crores. Moving on to some of the balance sheet numbers. The overall balance sheet grew by 22.8% to touch 4,91,600 crores. Loans and advances grew by 26.4% to 3,03,000 crores. Deposits by 24% to touch 3,67,337 crores. And the CASA ratio as at March 31st was 44.8%. You might recall in the December quarter, there was this special FCNR window of the swap with RBI where we had done about 3.4 billion. That was clearly a one-off. If you adjust for that, then the core loan and deposit growth was 21% or 21.8% and about 17% adjusting for that. As far as our network is concerned, the branch network touched 3,403 branches, of which 55% of our branches now are in semi-urban and rural areas. We added 67 branches in this quarter, and all of those were in unbanked locations. Moving on to asset quality, our gross NPAs as of year end were at 0.98%. This compares favorably with a little over 1% in the December quarter and roughly the same percentage a year back. The total restructured loans remained at 0.2% of our advances. On the capital adequacy front, our total capital adequacy is at 16.1%, of which our Tier 1 CAR is at 11.8%. The Board of Directors have recommended a dividend of 6.85 rupees per share, as against, I think, 5.50 rupees last year.